G'day ladies and gentlemen, welcome back to another Bitcoin video. Today we have a very short video, very brief update. We're looking into the short-term price action and also briefly the monthly candle because some interesting stuff has happened there. But ultimately the short-term price action in regards to the FOMC decision, which is the interest rate decision, which is coming in roughly 12 to 13 hours by the time this video releases. So we need to look into some possibilities there. What are the expectations? What does it mean for the charts? Stuff like that. Tomorrow, we're coming back with a video on Ethereum. We're doing a macro analysis on Ethereum, macro price targets, what the structure will look like on a long-term scale. This is going into predictions through 2023, 2024, 2025, and even into 2026. And so that's a pretty exciting video as well. But without further ado, let's get into the FOMC video today. Check out the VIP group in the pinned comment description below. You've got the results down there. You can check out the details about the group. We've been pulling in some major profits over the last month as Bitcoin's made this move upwards. And so let's get straight into the video. So I'll just start briefly by covering the monthly candle. We've talked about this quite a bit over the past few days. We had the monthly candle close on yesterday's candle close, which was great to see. And we did see a pretty strong monthly candle close. Namely, we got above the resistance level on the RSI. You can see this red line on the RSI acted as the bottom on both the 2015 and 2019 bottoms, both in the price charts and on the RSI level. That was the support zone. In this bear cycle, we actually came down, we lost that level, we came down and we flipped it for resistance, but we've managed to get back above it and close above it now, and that has flipped back. So that's great for macro momentum, just another indicator to add to macro momentum. On top of that, we've also seen a close above this red resistance line on the monthly chart RSI, in the monthly chart price action. And that resistance is stemming from 2017. You can see we held it for support for about 5 months before finally losing it in November, going below it for 2 months and getting back above it. We've seen a bullish engulfing candle on the monthly chart there as well. So, that's just another indicator there based on monthly chart here that macro momentum is increasing for Bitcoin. Macro momentum looks very good. The macro structure itself has recovered a substantial amount. I think that anyone at this point calling for under to sub 10K Bitcoin and, even new lows, it's like, well, I don't want to discount the fact that Bitcoin could possibly go down. It definitely could go down. We haven't seen full confirmation of reversal. That would come at 28.6K. We've spoken about that extensively in the past. I'm not going to get too much into it again, but 28.6K is the full reversal zone. But I still do think the people who are constantly bearish and haven't taken advantage of this move at all are coping, right? Because realistically, guys, we've seen a move on Bitcoin in a month of 55%. If you were sitting on the sidelines for that entire move, to a certain extent, you need to come back and start checking your bias, because you've missed out on the best January Bitcoin has had in its entire price history. This is the best performing January in Bitcoin's entire price history, regardless of whether you think the bottom's in or not. That is a shame to miss out on. So congratulations to everyone who stayed logical and followed the TA and acted accordingly. But to people who are constantly calling for 10K during that move, it is time to check yourself, because you might think that the bullish people are being biased, but in reality, in an effort to hunt down bias, you're actually ignoring your own bias there. So just check yourself, guys. Be objective here. It isn't a battle. People get into the mindset quite a lot in financial markets where it's like this team versus that team. It's like, oh, I'm on the bearish team, therefore every bull I'm gonna counter their arguments and not take it seriously. It's like, no, it's not really like that. You shouldn't be on either team. It's not a game. It's not a battle. You're not on a team, right? You're an objective market participant. You're versing everyone else. You haven't got teammates in this game, right? So it's very important to note that. I can sit back and I can look at these charts objectively and I can say the macro scale looks very good. That doesn't mean we can't correct in the short term. And this is where we get into now in regards to the FOMC decision. There's a very big difference between long-term bullish and short-term bullish, right? I'm not short-term bullish right now. I don't think there's reasonable data to suggest we should be short-term bullish. And I think FOMC, of course, will clear a lot of this up. But ultimately, FOMC is quite straightforward this month. Because look, what's going on is this. The market is expecting this column here. This column on the left is the market's expectation for a 25 basis point hike. The market on the right is the expectation for a 50 basis point hike. You can see the market is expecting a 25 basis point hike at a 97.7% probability, meaning that it is almost certain, according to the market's expectations, that we will see a 25 basis point hike. What does this mean? It means that unlike in other months when you see like 60% to 40%, unlike in other months, the market's priced it in. It's fully priced it in. It's basically fully expecting 25 basis points. So provided we see 25 basis points, which is very, very, very likely according to the market, right? Which is all we have to go off, by the way. According to the market, it's very likely, it's almost certain we see 25 basis points. Therefore, the market has priced in 25 basis points. Therefore, if we see 25 basis points, it's quite likely that not really too much is going to happen, okay? You know, it's obviously hard to say with this kind of thing because we could see something random, but realistically, the market's priced it in. It's pretty likely nothing's really going to happen in the price charts. So TA has to take effect. And I can tell you right now, short-term TA, just like it has looked for a few weeks here, doesn't look particularly good. We've got rounding out on the volume there. We have bearish divergence on the daily chart RSI. We have a bearish MACD cross that triggered 2 days ago. We have also on the 4-hourly chart some sort of ascending level. It's kind of hard to say this is a specific market pattern because it's really not. I guess you could call it an ascending broadening wedge formation, in which case that would be bearish as well. We also have bearish divergence on the 4-hourly chart RSI, but it is worth noting as well, we have bullish hidden divergence there as well. That kind of cancels it out. But ultimately, it's quite easy to see that the charts do lean bearish in the short term right now. They do lean overbought. We've extended dramatically. We had them, as we said, we had the most bullish January in the entire price history of Bitcoin. You can expect some sort of correction after that. But ultimately, I've stuck by this for a long period of time, and I'll continue to stick by it until we break one of these pink levels, whether it be 21.9k to the downside, in which case we go to 19.5 to 20, or whether it be 23.8k to the upside, in which case we go to 25k, which is where the conglomerate of moving averages are on the weekly chart. Until we break one of those levels, it's not worth reacting. So I don't recommend entering shorts or longs. I personally wouldn't be entering shorts or longs until we break one of these pink levels to the upside of a downside decisively. While we're in this range between 21.9 and 23.8, that is a no trade zone in my personal opinion. I don't think it's going to give you a probable risk reward ratio entering a trade within these two price regions between 21.9 and 23.8. But ultimately, that's what I wanted to cover in this video, briefly updating you guys on the FOMC decision, briefly updating you guys on the monthly chart. Ultimately, just to briefly go over it again. If we see a 25 basis point hike, that's what the market's expecting. You can expect neutral price action. Yes, you might see volatility, and that is just because of the hype that surrounds the event. But generally speaking, if you see 25 basis points, we might, okay, here's the thing, right? We might actually see a move. And the reason we would see a move is not because the hike has caused the move. It's because people are waiting for the hike to enter the market or exit the market. And so when the hike happens, that will give people the lead way to make a decision. So the hike, if it's 25 basis points, won't cause any bullish or bearish effect. 25 basis points will just leave room for the decision to be made in terms of the price action and the TA, right? But if we see 50 basis points, which is unlikely, but it's certainly possible, just like everything's possible, but it's very unlikely. If we see 50 basis points, that will be dramatically out of expectation for the market, and we will see a big decrease in the Bitcoin and S&P 500 traditional market valuations all across the board, because we've only got a 2.3% expectation of that, so it'd come as a shock to the markets for sure. So again, 25 basis points, neutral, but we will see volatility. 50 basis points, very, very bearish. That's basically what we can say about Bitcoin right now. Again, tomorrow I'll come back with an Ethereum analysis. Here's a little sneak peek of that chart that I'm looking at there tomorrow. But ultimately, I want to quickly check out the Bitget Exchange. This is the exchange that we use on the VIP channel. It's the exchange we use on the YouTube channel. It's my personal exchange that I've used for about a year now. Best way to support the channel is sign up to this exchange using my referral link. You get a 15% discount on fees. You get exclusive rewards and access to exclusive features on the exchange. And ultimately, this is the best exchange you can use in the market. It's non-KYC, no government regulation, lines up with the values of cryptocurrency in general. It's also got the 5 times lower fees than Binance, and it's got a protection fund to save it from something like FTX recurring this exchange, right? So sign up using my referral link, help yourself, help out me at the channel, and then check out the Crypto Academy as well if you want to learn how to trade for yourself. You want to take your trading to the next level, whatever it may be. Become a Trader 10-unit course developed by myself and MegaWorld Crypto. You can do that. All the information's on the website, and you can ultimately email us here at cryptoacademycourses@gmail.com, and we'll get back to you with all the information and a video actually explaining what the course is, explaining all the units, etc., so you can make an educated decision. All right, guys, thank you for watching. Catch you tomorrow for that Ethereum update. Cheers.